Hello and welcome to our first webinar for a patch of land debt offering. I'm Carlo Tabibi, the CEO of Patch of Land, and I'd like to welcome you all to the webinar and thank you for taking this time to join us today. Before we start, my lawyers told me I have to read the following disclaimer, but I'm excited to get to the fun stuff, so I'll do it as fast as I can. Past performance is not indicative of future performance. Any financial projections or returns shown on the side are examples only, and investors should conduct their own due diligence and not rely on the financial assumptions or estimates that are displayed here. Fluctuations in value of the assets that are subject to any investment are due to be expected. Additional risks exist due to a variety of factors, including but not limited to leverage, property operations, business risks, management, and environmental liabilities. There is a potential for loss of all or part of your investment capital, and each investor should understand that all capital invested may be lost. Investors should also consider these investments if they have no need for liquidity and can bear the risk of losing their entire investment. By being on this call, you agree to be bound by the terms of its use. Sorry for that, guys, but the SEC made me do it. Again, I'm Carlo Tabibi, the CEO of Patch of Land, and I've been involved in real estate for over 20 years and doing hard money lending for about 5 years. I've also started a few successful companies in the tech and e-commerce space, which I'm still partners in and are all doing well today. I've personally done over $100 million of real estate deals, touching everything from remodeling, developing, leasing, purchasing, selling, and a lot of property management. So I know where all the pitfalls are here. I've even done real estate deals in multiple states as well as 3 other countries. I'd now like to introduce my partner, Jason, the COO, and let him tell you a little bit about himself.
Hello, everyone. I'm Jason Pritton. As Carlo mentioned, I'm the COO and co-founder of Patch of Land. I've been involved in the crowdfunding industry since the very beginning, and I was active in working with Congressman McHenry and Congressman Dole to ensure passage of the new crowdfunding legislation in the 2012 Jobs Act. I used Patch of Land to help show how crowdfunding can be used as a responsible, transformative vehicle to help raise capital and get great projects funded. I also have a strong background in e-commerce and marketing, and I've founded several startup companies over the years. I've even owned a company with the government and military, both domestically and internationally, that rolled out multi-million-dollar technology project designs and implementations. I very much appreciate everyone's time today and like to encourage you all to contact me directly anytime. If you have any questions, I'll turn it back over to Carla to talk more about Patch of Land as a company and what we can offer.
So, who is Patch of Land? We are a real estate crowdfunding company offering debt with first position liens and personal guarantees and working with developers to bring the best possible deals to our platform for you. Currently, we're focused on offering high-yield, short-term debt on single-family residents. We are looking to expand into commercial deals as they become available to us. We've decided to focus our platform specifically on debt for the simple fact that it's safer for our investors. Some of you might be wondering why, but I will touch on this a little more in detail later. So why does Patch of Land exist? I've been in real estate long enough to know that it's hard to find good deals. They're just too hard to come by unless you're in the know. Our goal is to bring high-end real estate deals to the crowd that were previously unattainable by the general public. I'm using my knowledge, experience, and passion for debt, real estate, technology, and online marketing to bring the best possible deals to the crowd while rebuilding communities across America. So how do we do this? Well, we've been able to get our name out into the developer space and have made a name for ourselves as a lender of funds to developers for their projects. We have hundreds of developers constantly looking for funds for their deal, and we're able to pick what we believe to be the best ones for these investment offerings. Despite the large number of potential borrowers, we have very strict due diligence standards and a rigorous process of evaluation that is based on several factors. So what do? We find developers that need money for a particular project and review who they are along with what they're trying to do. If we like the developer's credentials, we move on to review the property. If then we like the property, we will do a deeper due diligence of the overall deal. This includes the actual property and its surrounding market area. This allows us to better understand the overall risk and potential mitigants of a deal. We only accept the deals that we feel have the minimum amount of risk and the best mitigants available for a quick resolution. You know, a lot of my peers ask me what makes us so different than the rest of the crowdfunding companies out there, and I love it when they ask me that question. Firstly, we're a real estate crowdfunding company that's solely focused on debt. Secondly, through my many years of experience, I've learned that when you're lending money, the best deals can only be had by those that have the funds available and are able to move quickly. This in turn not only assures we can get the best deal, but we can get the best rate on that deal. This is what we call a patch of land, pre-funding the deal. We do this pre-funding with internal capital and use those funds to get you the best possible rates. Also, because we pre-fund, you get to earn interest as soon as your dollars hit our escrow account. There's no waiting around for others to fund the deal and for the deal to close. This is another major advantage of our platform, and I'm proud to say we are the first and the only crowdfunding company out there doing this in the world today. So I think it's a great time to take a quick moment and again encourage anyone who's joined our call, if you have any questions, to enter them on the side panel of your screen, or you can email me at carlo@patchofland.com, or you can email info@patchofland.com, and we'll answer those questions in a public forum. So we sent an email out on Wednesday to let our investors and the public know about 5 deals which are on our site. One has already been fully funded. Another is currently open for funding, and that's the one we'll be focusing on today. Another is over 90% funded, and if time permits, we'll give you a great update on that too. There are also 2 available for pledging, and once we close those deals with our pre-funding dollars, you can place your funds in them. For now, you can just click on it and show your interest. Now I'm excited to let you hear more about our newest open deal, the $1 million rehab, and for that I'm going to let my partner Jason take over.
Hi, this is Jason Britton again. I want to run through the specifics of our $1 million rehab project, which is located at 2 Tornquist Court in Franklin Park, New Jersey. First off, this opportunity has been pre-funded using internal capital and is underway. Anyone who chooses to invest in this project will start accruing interest returns immediately after their funds clear escrow. This is a debt-based investment with a 12% annual return. The loan has been written for 12 months, but we expect repayment in only 6 months. Interest in the property has been very strong already. We have a current offer, and we expect a quick resale. The loan has been written for a total of $550,000 and is secured by a first position lien on the title, along with a personal guarantee from the owner or developer, who is a high net worth individual. The first position lien means that we would get first claim to the property in any sort of liquidation event. Our investors get paid first. The funds are being used to complete final construction, to buy out an existing lien, and to cover closing, origination, and broker's fees. Clients who invest in this opportunity will receive interest payments monthly. Since this is a 12% annual rate, they could expect to receive 1% of their investment total per month, with a balloon payment of their original principal after 12 months or when the developer pays off the loan, which again is expected in roughly 6 months. 2 Tornquist is a very high-end property in an extremely high-end niche Indian community near Princeton. It was meant as a retirement home for the owner. However, he's decided to relocate somewhere warmer than New Jersey. This neighborhood is occupied by homes up to 30,000 square foot in size, and it is a farmstead community which requires developers to have at least 6 acres in order to build. This particular property has 8 acres. It is a 5,200 square foot home with 4,651 square foot livable space. It has 4 bedrooms, 5 bathrooms, and it's 90% finished. All permits are in place, the heat is on, lights are on, marble, tile, and appliances are all purchased. The remaining construction, however, is being handled in 3 phases. I'm pulling up the construction schedule now. Patch of Land will be holding the construction funds in escrow until we receive proof of work completed from the prior phases. Phase 1 is to finish carpentry and other interior work. The approximately $68,000 for the work has already been funded and it's underway. Phase 2 is to finish marble, tile, and appliances, while Phase 3 is mostly exterior work and polish. According to the third-party appraisal we've ordered on the property, it is worth between $975,000 and just over $1.1 million, depending upon the appraisal approach. However, the developer has currently received an offer for $1.3 million from a neighbor. Another neighbor has requested last look privileges in order to place counteroffers. These neighbors are also high net worth individual. One neighbor is interested in purchasing the property for his son, while another is interested in using the home as a guest house. We've taken the middle valuation here to determine a loan to after rehab value ratio of approximately 48%. And considering the current interest, that may still be conservative. The borrower and developer, Mr. Patel, has been in real estate for over 20 years. Pulled up his resume here now, so you should see that on your screen. He went to Polytechnic, received a master's degree. He started out as an engineer in 1970 through 1982 when he moved into real estate development. He currently owns an insurance adjuster company in New Jersey. We pulled credit on Mr. Patel. He has a very high score. He's considered a high net worth individual. So the combination of a very favorable ARV, the unique nature of the property, along with strong interest in current offers, and a highly qualified borrower gives us confidence in this opportunity. We have pre-funded, and as I mentioned before, the project is already ongoing. We expect construction and rehab to be finished within 6 to 8 weeks and placed back on the market at that point. As I mentioned earlier, the borrower already has an offer on property and interest is strong. So we'd like to take the opportunity now to answer the questions that you've sent in about this property. Again, as you can see on your site, we have a lot of documents in the documents section here to go over the actual appraisal specifics. Mr. Patel's resume is there, the construction budget and timeline is there, as well as a full investment breakdown and summary. So if you have any questions like that, again, I encourage you to reach out to me or Carlo directly, to send us an email, or even to ask it here, and we'll make sure to answer your questions.
No questions have come in as of yet, but just to show you one of the ways that we review deals such as this, in front of you is a loan analysis document, and it shows how the overall deal is figured out. Over here, we show you the three different deals, three different price offerings that we put in place. One being at the lowest possible appraisal value, which is $975,000. One is at the $1.153 million average sale price to comps. And the other one is the $1.3 million offer that Mr. Patel has already received. We're waiting for that to come in on paper, but we've been told that it has been made. In fact, two have been made. Once you look at this screen, you can actually see the different loan-to-value ratios that are in place. And it also shows what would happen if the price of properties fell in this area. Okay? I mean, if it drops 20%, which is the worst-case scenario we have on here, your ARVs are still at fantastic rates for a deal such as this. Just by way of understanding, we've been able to lower the risk on this property because even though it is for $550,000, approximately $85,000 is being held back as part of an escrow fund that we're holding. And so the purpose of that is once Mr. Patel finishes phase one of the construction budget, which is here on your screen right now, which is the larger part of the budget of $68,000. Once he's finished that and shows us some of the receipts and some of the work he's done, we will then release the next round of funding of $50,000. Obviously, if he didn't finish the $68,000 and did mess around with us, we'd be able to step in, and we still have the $85,000 to finish the project property. In addition to that, at the bottom, we also say, where is that page on that? So that's fine. So again, there it is. You can look at these you can look at these documents anytime you want on the side of the screen. They're available for anybody to pull up. The resume, the investor agreement, the investment summary, the construction budget, the third-party appraisal. And again, if there are any questions, please feel free to send them on in. So now I'm going to take a few minutes to walk you through how an investment is done on our platform. So I'm going to take you back just to the home page for a quick minute. I am actually logged in, but if you want to log in or join yourself, for those who haven't, you go here to the investments page. And on this page, you can see all the different deals that we currently have available for funding. So this is the $1 million remodel. This is the one that got funded very quickly. This is 90% funded over here. As you can also see here, two of our deals have already been repaid back. So we're happy to say we're doing well over there. Again, if you go to the Get Details page, you can see all the details. You can see the pictures. This is a brief summary, basically what we've kind of said to you on the phone today. A quick overview of the deal. a quick valuation report. Again, you can see the different appraisal values that we've used to calculate this, and we have taken the lower middle one, not the higher middle one. And so again, there's a quick property overview. You've got a map here to see what you want to do. We also showed you what the area looks like if you want to look at the Google Maps. And in front you can see the kinds of homes. This is the subject property over here on your screen. Over here is a beautiful, massive house. And then as you can see, there is another one over here. There is actually a possibility for a pool to be installed, as you can see it in the ground there, but it's not done yet. So again, moving on, one can review everything. You can see everything that's being done. You go to the borrower, you can see that. We'll show you a quick financials tab of what's going on. You can see everything there. Again, the capitalization of how the loan is being done, how the loan is being paid off, and where the money is going. Again, a valuation report, so we show you everything that's being done. And a brief description of the approximate amount that will be coming in monthly for the loan, and how that will be paid off, which says here it will be paid off with monthly interest payments. Moving on, we have a timeline that's interactive for you. You can see when the money will be coming in, the different dates and times that interest is due and will be dispersed to people throughout the year. Here it says property is placed on market, but it's actually happening right now. I mean, he's getting ready to put it on the market for a significant amount. Again, over here you can see the developer information. Any questions that anybody has on the site will go here, and we'll answer them as people come to ask questions. And then over here we will have an updates page as more information comes in, pictures, information. We're happy to report that he has already received the $68,000, and he is working on doing the first phase of the construction. So we've tried to make the process as easy as possible, and as you can see here, there's a minimum $5,000 investment. In the future, we do plan on going to a lower investment amount, but right now we're still working the technology and improving everything, so we're keeping it a $5,000 investment. Today I'm going to make a $10,000 investment, and there you go, that's my $10,000. I'm going to click the Invest button. And this is showing me exactly what's going on, the $1 million remodel to Tornquist, Franklin Park, New Jersey. It shows what you're doing. It shows the amount of money that I'm investing. Now, in my account today, I actually have $406.17 of available funds that I've already received from my previous investments. So what I do here is I can just press that button, do 406.17. So I'm now putting my interest income already in my account at Patch of Land into the deal that I currently have. So I will only need to transfer in, as you can see on my screen, $9,594. Okay? So I'm basically getting interest on top of my interest. I go here, I click continue. And as you can see, there's my home address. Oops, you can see I live in Beverly Hills. So I'll click continue. Once you enter your address, it will stay in there for you, by the way. And here we are. We're going to the DocuSign page, so we've made it very, very easy. This is electronic document signing online. I consent to use electronic records. I will review the document. I will press Start, and so I will. Obviously, everyone on this call can review the document at any time they like. We're going to jump forward today. I'm going to agree. I'm going to sign here. There's my full name. Some of you that use DocuSign know how to use this, and you can enter in your own signature if you like. I will adopt and sign. Okay. Confirming signing. By the way, because I've previously invested, it obviously already knows my other information, so it's easier the second time around. So I go here, I select my bank account, I click continue, and it's showing again on the screen. I'm doing a $10,000 investment. $406 of that is from my current account at Patch of Land. So I will only need to send in $9,594, and I place my order. By the way, we do use 256-bit encryption on our website. So a lot of other websites use 126, but we've gone to 256, which is banking technology. I'm proud to announce that our CTO is a tech guru and was recruited by the CIA, but he actually declined. So there you go. There you have it. There's my investment. Your money will now be pulled by us automatically through an ACH debit. It will move into BankBox. That is a company that's working with a lot of different crowdfunding companies out there. That will go into a BankBox account. It will then go into our escrow account. It does take a few days to do that transfer. And then once it hits that escrow account, because we're pre-funding the deals, you will start earning interest on your money immediately. So I've not received any questions as of yet.
So actually, we'd like to just go quickly over our due diligence as well. One of the the common questions that we actually get from investors is basically how do we review these particular opportunities. We want to make sure that we're as transparent as possible. So how do we do the due diligence? Well, we start by having an in-depth discussion with a potential borrower to find out why he or she feels that it's a strong opportunity. We then order a third-party appraisal or broker price opinions in order to determine the current market value. We also take a look at the local real estate market for this asset class to determine market trends in order to avoid areas that are seeing declines in property prices or demand. And at that point, we do a full review on the title, permits, existing liens, whether there's any environmental factors that could be a concern. We also take a look at rehab plans and cost estimates to determine whether or not they are realistic in both capital needs and in timeline estimates. Finally, we do a full background check on the borrower, including credit, criminal, and negative checks. We want to make sure they don't have a history of default and that their personal guarantee is actually worth something. If after all of this you still feel that the loan is well secured by the property and the borrower and that there's enough float in the project so it's not endangered by cost overruns or market downturns, as we showed you in that investment summary earlier, then we will move forward with the project. And we co-invest and we pre-fund with internal capital and make sure that it's moving forward. So
there we go. Let's see if there are any questions coming in from anybody. Open this up for a second. Okay, so here we go. A couple of questions coming in here. Why do projects have to fully fund if you are pre-funding? Projects don't actually have to fully fund. We obviously want them to fund by the crowd, but if they're not fully funded by the crowd, our pre-funding dollars stay in there, and we're earning interest alongside with you guys. So we put the pre-funding in there as a methodology to prove that we trust these deals. If the crowd doesn't like a specific deal, we don't mind. We're still involved in that deal. We're going to be involved in that deal throughout the entire point in time. So while other crowdfunding companies do need deals to fully fund, we don't need a deal to fully fund. Another person has asked about SD IRAs and if you can use your self-directed IRA. Yes, you can use your self-directed IRA. We've already had people invest through an SD IRA. If you have a custodian that you're using today, we can work with that company. And so you just send in the forms to us, send myself or Jason an email, and we will walk you through that process. And we'll fill out the form, get all the information necessary for the SD IRA. With SD IRAs, you can do interest-bearing deals. I do not believe you can do equity-based deals, which is why we are doing our best to make sure we actually are going to integrate with as many SD IRA companies as we can to automate the process for you. Obviously, that's going to take us some time. Another question is asked, why is the loan term for 12 months but an expected of 6? So what we do is we make sure that we secure a deal that's safe for the developer and safe for our investors and safe for us. I come from a world where I try to remove risk for everybody involved. And so if we were to make a loan for 6 months, but it took the guy 7 months to sell, well, I don't want to be in a position to foreclose on this guy. You guys don't want me to foreclose on this guy. You just want your money back without litigation, without a lawsuit, and without anything. So all I do is give them a 12-month loan, and luckily, and they do pay us back early. It's a great thing that it actually gets paid back in 6 months. It shows that the deals that we're doing are a solid deal, that people that are getting these loans are able to pay them back early, and that's my goal throughout. The sooner they pay back, the lower the level of risk for everybody involved. Next question that's being asked, do I need to be accredited? Yes, you do need to be accredited. Per the SEC laws that are surrounding the crowdfunding space and the 2012 Jobs Act, etc., you do have to be accredited, and accredited means you need $200,000 of income individually or $300,000 of income yourself with your spouse for the last 2 years, or $1 million of personal wealth excluding your home. Okay. Someone asked, is the neighbor's offer in writing? We are waiting for that offer. In fact, just this morning, I called the broker involved that gave us the loan, and he is requesting that document from the real estate agent. So I'm talking about my broker, which is the loan broker, but the real estate agent is going to be sending that offer to us. As soon as we get that, we will be updating and posting that. That was from Bill. Thank you. Next, another person has asked, will we receive a recording of the presentation? Yes, you can do. We will be posting it on our website and our blog, and we'll keep you posted as soon as that's possible. Another question. Wow, so many questions. It's great. Does it cost me anything to invest? No, it costs you nothing to invest. It costs you your investment dollars. We need that from you. But other than that, there are no fees to you. What we show you is 12% interest is 12% interest. We ACH debit it. We get charged for that. We push the money to you. We get charged for that. Your bank might charge you a small transaction fee of a few dollars to pull it in and out, but as you know, that's standard for your own bank, and we can't control that. It's like text messages. Is there a personal guarantee on the deal? Yes, there is a personal guarantee. The developer / owner is a high net worth individual who has personally guaranteed the deal, and so that is definitely in place. Can I read? Okay, so as I showed a minute ago, you can reinvest your funds into the deal as they come in. That's the goal behind this. We plan to be able to bring you more than one deal a month for you to choose from, okay? And so if you put in $10,000 and you get your interest next month, you can then reinvest those investment dollars into the next round of deals. Let me see what else we have going on. All right, that seems to be it. So at this point in time, I think everyone's seen the current deal at hand. Thank you so much. It seems great. It's very, very good. I'm very happy that everyone's been on this call. I am going to walk you through one of our other deals just so you can see it and how that works too. Because over here we have the upscale full rehab in a growing Montclair. This is the deal that we did approximately a month ago now. As you can see, $381,500 have been invested in the deal. I just got another question. I'm going to answer that in a minute while I walk through this. So this is another deal that is available for investing. It's a 13% return. The one question on this deal that everybody keeps asking is, why is the ARV so high at 70%? So I'd like to give an update to that to everyone. The reason why it's at 70% is, if you look on your screen right now, the appraisal came in at $600,000. But that appraisal was made prior to a full understanding of what was going to be happening with the subject property. Since then, the third floor attic is being converted into a full master bedroom with an ensuite closet and master bathroom. It's going to be quite large. It's going to greatly increase the square footage of the house by a good few hundred square feet. Additionally, the current building is a 1-bath or 1.5 bath, but it's being upgraded to a 3.5 bathroom. Okay, and then furthermore, the kitchen that was in the house has been fully gutted, and a brand new full top to bottom kitchen, full cabinetry, stainless steel appliances, top-notch everything is being installed in this house. The developer who we've worked in on 2 previous projects, one of which he has paid back, and he sold that at a 50% increase in value. And he has told, and he actually has a property around the corner from this that he previously sold at $635,000, which is about 600 square feet smaller than this subject property, which was a similar design. He also lives in the neighborhood himself. There is a double personal guarantee from himself and the contractor developer partner. And so again, I'd like to show everyone this property because he believes he'll be putting it on the market for $699,000 and closing in the area of $675,000, which drops the ARV to 62%. So back to a question that is here on my screen. Just give me 1 second. And the question is, on Franklin Park property, the renovation cost seems low. For example, the rock sheet seems quite low. So just so you know, let me pull that up for you. This is finishing the house. The guy has already spent, just by way of example, he bought the property for $375,000 in 2003. He's already spent $975,000 on the property. So all you're seeing here, okay, which your question was regarding sheetrock, and sheetrock is, I didn't actually see sheetrock on here. That's a sheet metal. Maybe drywall. There you go, drywall, $8,700. Again, if you look at the pictures of the property, I don't have internal pictures, but I can definitely get those up as well. If you look at the pictures of the property, I mean, he's already done. As you know, people in construction know, when you have a property like this, as you can see, the windows are in, the doors, everything. I mean, this house is fully, it's a beautiful house. It's very, very large, 3 floors. So again, to answer your question regarding the sheetrock, it's already done. The house is 90% finished. If you again look at the construction budget, it's just a little bit of work that needs to be done. It says finished carpentry, drywall, a bit of tile work, marble bathrooms, a bit of paint, some cabinetry work, a little bit of heating and ventilation. The heat is on. There's actually all the units are on the ceiling. Again, it's just a little bit of finishing touches to be able to get the property onto the market. The reason why the guy wanted to borrow the funds, and like we said, he had an offer at 1.3, he wants to finish the project because he believes that by finishing the project, he can actually get a greater amount than the 1.3 has already been offered. So that's why the construction budget is only $153,000. He's spent $975,000 of his own cash on the subject property. So there you have it. You know, it's a great deal. We believe it's a great deal. And if you have any questions, feel free again to email them to us.
Absolutely. So we will make sure to all participants of this webinar that we get out a personal email to each one of you with our direct contact information, and we strongly encourage you at any time, if you have additional questions, additional concerns, you're looking for any piece of information that you're not seeing here, please by all means reach out to us at any time. We will get the brokers, the developers on the line here and make sure to find you answers. So
So for that, we'd like to say thank you very much for being on our first webinar debt deal. If you have any questions, I'm going to give you my mobile number. You can contact me at any time. Carlo Tabibi, you have my email. It's carlo@patchofland.com. I like to keep myself available to everybody. You can call me at any time. My number is 310-666-8884. As a guy once said to me, I'm a lucky devil with that number. So again, if you need us, and Jason's number as well.
My direct contact, again, is Jason, Jason, at patchofland.com. And you can reach me on my direct line at any time at area code 949-873-3723.
Thank you, everybody, for taking this time for joining us on the call today, and we'll speak to you all soon.
Thank you.